Hello everyone, welcome back to Just Invest Today. In today's video, we're going to talk about the convertible bonds that Alibaba just issued because I see a lot of worry in the market. Alibaba going to zero, is this negative? What is happening? And I just want to kind of not really break it down, but just kind of talk about what's happening in the overall market sentiment towards China and Alibaba, because anything Alibaba does, it's always a negative. It's incredible what people are saying about Alibaba, no matter what happens. It's insane. And I just want to go through everything happening with Alibaba, because if it's another company, it's a good thing. If it's Alibaba, it's a bad thing. And I kind of love it low key, because this is keeping the stock price at this nice level around $75, $80. And what Alibaba is doing is that they're buying back shares. So they reduced their count by already 5%. They just issued out more bonds. And what do you think they're going to do with that cheap money that they're getting? And they need this cheap money to keep buying back shares, because if you didn't know, now you know, they have a capital control kind of limit. So they can't just keep converting all that cash. They have like 50, 60 plus $billion of actual cash on their balance sheet, but it's in Chinese dollars. So they can't just convert all that to buy on the New York Stock Exchange or the Hong Kong Stock Exchange. They have capital control. So that's why they're getting more money by issuing these bonds. And that's what have people really worried about Alibaba. But guys, if you really think about it, they are legit buying back shares at a cheaper price. They're issuing bonds that they have to pay at a low interest rate so they can get money to buy back their stock at this low price. And then maybe in the future, if someone wants to convert that, they're converting that at a higher price. So they're literally just buying low and selling high. So why are people upset about that? It's just astonishing. And I want to give you an example. Like when Apple, it issues out debt and it gets money back. And what do you think they were doing with this money? Buying back shares. The same thing that Apple does, everyone loves. But something that Alibaba does, everyone hates. Another big topic I want to talk about is this war. Look what's happening during the war, and no one's really talking about this because a lot of people have these big worries. Why is TSM at these all-time highs? Apple is still at these 30 PEs. You see a lot of these chip manufacturers that operate or need money from China. Look what's happening. They're all at these high prices, and it doesn't matter. They're not worried about these Chinese risks. But as soon as it comes to Alibaba, everyone is worried about these Chinese risks. Do you realize if China really takes over Taiwan, what do you think is going to happen with Taiwan Semiconductor? That price is going to crash, but it doesn't matter. TSM is still trading at all-time highs. So it's obviously has nothing to do with this Chinese risk that everyone's talking about, because look at stuff that's going on right now. There's a war happening right now. Israel's market is still running perfectly smooth. It doesn't matter. So that's how you can kind of just see outside of the bubble and what people are saying and just know that it's wrong. They're doing anything to kind of cripple Alibaba. Alibaba is still growing at 7 to like 10%. They are estimating that they're going to actually grow double digits in the next few quarters. Alibaba doesn't even really need to grow that much, to be honest. If it grows 5%, that's enough. They are buying back so many shares. It's actually insane, especially at these cheap prices. 4 PEs probably selling around 9. And guess what's happening? In 5 years of owning Alibaba, if they keep this pace of buybacks, they're going to buy back 25% of the company. That's insane. And I don't think people understand how positive that is for Alibaba if it just maintains this price. Look at companies like AutoZone or Dillard's or any of these companies. Like they were super successful of not even growing that fast. They were buying back shares at cheap prices. Let's even talk about the home builder, NVR. This is a buyback story. Like literally the whole premise of NVR was a buyback story, not growing that much over time, but still growing. But look what happened with NVR. It was a huge success. You don't need much of Alibaba's growth to take over. Even though Alibaba is still growing, their cloud division grew 45% last quarter. People are not really talking about that. They're not seeing what Alibaba is doing with AI. They haven't even fully monetized their business of what they're doing with Tmall and Taobao, because they just want more customers right now. And even in the cloud division, they talked about the same thing. We're seeing the Chinese market kind of recover, the economy recover, growth is still happening. So I'm just seeing the overall picture of what's happening with Alibaba. And a lot of people are just worried about the convertible bonds. And oh my God, a lot of people in Alibaba are short-term traders. You just have to sum it up to that. Short-term traders, because they are so worried about the stock price. If Alibaba goes 10, 15, 20% above their cost basis, they are going to sell out of the company. 100%. They're going to sell out of the company. Us true Alibaba shareholders are looking at this long term, another 5 to 10 years of just holding Alibaba, just steady pace holding the company, especially as it performs. The fundamentals for Alibaba are still improving. It's not like the free cash flow is going to go down year over year, or the growth in revenue is going down year over year, or they just don't have enough cash on the balance sheet. We can honestly 100% predict that in 5 years, Alibaba is going to be a bigger company. I have 80 to 95% confidence like that is the case, even though we still have businesses like PDD and TikTok hurting Alibaba, but still, in 5 years, I still believe that Alibaba will be a bigger business. That's the only thing that we really got to rely on, especially when they're giving us a dividend and buying back shares at these cheap prices. So everyone that's worried about these corporate bonds and, oh, look at what Alibaba's doing, they need more cash, even though they have $60 billion on their balance sheet. They're buying back so many shares. They're doing the right thing. We have a good CEO, in my opinion now, someone that's actually talking about the business and seeing what and understanding what they did wrong. Guys, I am super bullish on Alibaba in the next 4 to 5 years, guys. So tell me what you think about this video, like it and subscribe. Peace.